All right, let's take a viewer email right now. It's from Joe, and it's on Amazon. What do you think, given the current political conditions on Amazon?
So my long-term thesis on Amazon is very bullish. They are dominant. They're dominant in cloud. They're dominant in their retail business. In the very short run, it's been used as a source of funds for people who underown financials. Financials are the most underowned sector in the market. And so there's been some people taking some money. There's been no technical damage. And so I have no problem holding the stock. I think the focus is going to be quite positive coming into Black Friday. And realistically, there's going to be a lot of positive news flow. They made big investments in infrastructure. They're likely to be leveraging that. They're going to have a big Christmas season, big holiday season. So I would own the stock, but I would just say that we're in a market now where you don't have to be so focused on a few big names. Mid-sized companies and some of the other sectors have other alternatives as well.
Okay, let's take a caller now. Louise in Hamilton, go ahead.
Good evening. Thank you very much for taking my call. David, I really appreciate your ability to look at the big picture and to share that with us, the viewers. My question is on Palo Alto. I now have about 50% of my savings, my RRSP in American stocks, and this is one that I've had for a couple of years. So I'm interested whether to keep it, whether to buy more perhaps, or whether to sell it at this point in time. I'd like your opinion and whether you own it.
Right. Louise, it's a stock we have owned in the past. We don't own it right now. In technology, I would say the key themes right now, semiconductors absolutely are leading the way, which is important really because semiconductors like the new copper, right? Semiconductors go into everything, and they've led coming into the election, they've led nicely coming out. So semiconductors are a very interesting area. NVIDIA is one that we own. I'm going to talk about one tonight. Or you can buy the ETF, XSD, which holds the basket of semiconductors. I also like cloud. And cloud is, a very key theme. And of course, Amazon is a part of that. And Microsoft is a part of that. Security has been difficult recently, and it's been underperforming. And so given the break in the stock, I think I would avoid it at this point. You may choose to move on. And this is a message I wanted to give tonight. When we get into a market where there is so much leadership, if you own something that is not performing, it's time to move on, right? There's too much opportunity in a market like this to stay in a position that's not working. And so on this one, I would take the message. It's a big break. It's a 13% decline today. I would move on.
Okay. Let's take another caller. Kevin in Aurelia, go ahead.
Good evening. My question is on Bank of America. It has had a good run-up with all the U.S. financials. It's sitting at around $20.30, I think, right now. Would you be a buyer at this price level, or do you believe there'll be a pullback in the U.S. financials in general? Thank you very much.
Okay. So, Kevin, a few points. The first thing I'll disclose, this is the largest holding we have as a firm. It's a very large position for us and has been for some time. Bank of America, like the other financials, have a lot of interesting attributes right now. The first thing I would say is technically, if you put up a weekly chart that took the last 8 years, the last 2 weeks are the most significant 2 weeks in the last 8 years, both from a volume perspective and from a price perspective. This was a very significant technical breakout for this whole group. The second point that I would make is this was over 2 weeks and there has been no retracement whatsoever. It tells you how much buying there is underneath the market prepared to buy these things. Now, why? Clearly, Bank of America is very focused domestically. They're a winner with rising rates. The bond market appears to be broken. It looks like long-term interest rates are headed higher for some time. The second thing is they have been heavily, heavily regulated. And whether we like the new president or not, he's likely to deregulate, which is going to be a tailwind to them. Capital markets are behaving much better, and Bank of America has a big capital markets business. So on a lot of fronts, not to mention the fact that the economic data in the U.S. is improving and that the U.S. banks are relatively inexpensive, I think that you can do well 3 ways. I think that you get earnings growth. I think that you get dividend growth because the dividend payout's quite low relative to our Canadian banks. and you can continue probably to get a little bit more multiple expansion based on the sort of better prospects for the financials group.
Okay, let's take another caller right now. John in Toronto, go ahead.
Yes, my call is about Tech Resources. This stock has skyrocketed the last 3 or 4 days. I don't think it's just because of Trump. Is there a shortage of coal, and what is the price of metallurgical coal right now?
Okay.
Thank you.
So you make a good point. This is not just because of Trump.
Oh, it's a lot because of Trump.
Look
though.
at Tech bottomed in December of 2015 at $4.80. It's $34 today. It's up a few dollars in the past 2 weeks. This has been rallying long before a Trump election. So here's the situation. Coking coal, it appears, is being held back in the Chinese market. And so as a result, prices are going higher. Now, it's certainly helped by the fact that you may have a more friendly regulatory environment in the U.S. It's certainly helped by the fact that the steel industry appears to be headed higher. In our global macro portfolio, we own the steel ETF SLX. It was up, I think, 6% today, and it's been rallying very sharply. The whole materials group is one of the 5 key groups that's leading this market. And tech has a tremendous amount of leverage in its business model. So certainly exacerbated by a Trump election, but this was headed straight higher, even straight into the election. If you take a look at the 4 weeks leading into it, there was no weakness in the stock. So again, market has been signaling. Now, how high can the materials go? If we're going to get fiscal stimulus in the U.S. and an infrastructure spend, which is very possible, there's going to be demand. If there is demand in the domestic economy, there's going to be demand. And so I think that on a lot of fronts, you can take a look at the coal ETF, KOL. And that bottomed in January as well at $5. It's $13 today. Again, it's been moving straight higher. So this is not a short-term issue. It's something a little bit longer term. There's obviously risk in it. It's a materials company. But it's in our top 15 holdings at the firm.
Okay, we're going to be back with David Burrows. He's President and Chief Investment Strategist of Barometer Capital Management, answering questions about North American large cap companies. You can call us toll-free 1-855-326-6266.